In the last month, Bitcoin made a gains of 22% as we stand now. We are hovering around $11,200 after the big crash yesterday from 20,000 to 10,500. Although Bitcoin made a legendary move and its price is from a few days before in a uplift in a rising trajectory, our dominance that is currently at 61% in a falling trajectory. Why is that? Today I will show you the biggest Bitcoin dominance chart, monthly chart, that is tracking Bitcoin dominance from 2013 to this day. I will present you the bearish case and resistance that is in front of us. So stay tuned for the Bitcoin dominance technical analysis. So let's dig right into it to cover all our bullet points for today. As you can see, we are on a monthly chart of Bitcoin dominance, tracing it from the 2013 till this day. First of all, last time we drew on a weekly chart. Also check out our latest videos and the videos before our daily and weekly charts and technical analysis of those. This video is making our Bitcoin dominance trilogy. Wow, I just made it up and it works. So check that out. This is the conclusion to our Bitcoin dominance analysis. As I was saying last time, we drew a rising wedge, a bearish pattern on our weekly chart. And here it is. This was our rising wedge that we pointed out that here is the break of the rising wedge on the beginning of this year. And of course, our attempt to get back in, which was forcefully rejected. This is now our big resistance. But this rising wedge is a part of even bigger rising wedge that played out already. Let me show you. So as you can see, our biggest rising wedge is tracing all the way from 2017 till the beginning of 2020. The resistance is clearly shown and support is the same as the rising wedge from our previous wedge, and everything played out just the same as the initial rising wedge from our latest video. Once again, notice the resistance of the pin of this rising wedge. At the moment you can see that we are playing the bearish scenario and that nothing is pointing out that we will go to the upside, only that this dominance we keep on falling. We are currently, as we said, around 6160. I expect a much lower number in dominance and the boom of the altcoins and the rise in it. Now, what makes this super interesting is a channel that is outdated and that is coming from 2013. I will draw it for you now and you will see why this wedge broke and what is the biggest resistance on this chart. If you can see it, check it out. Something like this. Voila! So as you can see, the price kept on going all the way from the 2013 and was moving in this channel, down sloping channel. As you can see, this was our support at 2014, then support, then in 2016 support. Of course, 2017 we broke it with fears to the downside, and you know the rest of the story. This was the beginning of the major bull run, and something that we are currently just waiting for. You can see the resistance on this channel and the validity of it. Now check out this part. This is something that is currently very important to us, and because of this part we are tracking this channel from the 2013. Isn't it obvious where resistance was? The support that existed in this channel is now our main resistance. On many occasions we tried to get in the channel, and look at our latest attempt. On this channel from the May of this year we tried to get back into the channel, but was extra heavily rejected. By what? By the one and only middle line of this channel. One more proof that this downward sloping channel is valid and extremely strong and important. Of course, price is no longer moving in this channel, but the proof that it once existed is there. What to expect from this point? On the monthly chart, expectation is downward sloping trajectory. Frankly, I was a bit surprised in any other scenario. Of course, this target is just raw target, let's say, not calculated. This is just a projection so that you can see in the future. But let's be more specific and let's ask Mr. Fibonacci what he thinks of this example. Okay, let's draw a Fibonacci retracement from the biggest point on this chart to the lowest point. And let's see what it's showing us. And there we go. It's showing us a lot. As you can see, the major levels of support and resistance was highly respected. Let's just check out the most obvious and the most important, always 61.8%. Can you see it? Let's draw at 38.2%. Now let's turn off the Fibonacci. And what do we have? A very clear resistance that was once support in 2016. A very clear resistance that could possibly become our support in the future price movements. This support could be around 57, 58. So 57%, around that number, is surely to get filled, because I don't see any resistance that will hold us back to this level. When we reach that level, we can then talk about our further levels and targets. For now, let's keep it this way, okay? What do you think about this idea? Let me know in the comments. If you like the video, and for any future updates, please subscribe to the channel. And until the next time, the Cryptosaurus is roaring with you.